Okay guys, welcome. Happy Friday. Let's get into the stock market technical analysis. We're going to start out here with triple Q's tech sector. All right, so the last video that I put out, I talked about a sell signal coming on the break of this trend line right here on the hourly chart. So you'll see I have it marked out. We held that support for several times, but we started to put in negative divergence. Again, I've got that circled out. So, this was your former high. Here's your new high. And yet you see the momentum, how it's dropping off, going lower. That's negative divergence. That was telling me that we were likely going to get a break soon. I don't know when the break's going to come. It just says, okay, be on the lookout for it. And I also talked about what I was looking for in terms of a sell signal, and it was a break of this trend line. So you go back and watch that video. You'll see me lay it out in detail. Now, this break came at the very end of the day. But again, it was pretty impulsive, and it was a nice, solid hourly close below that trend line. So that was your sell signal. You had to be, basically there at the end of the day. The market likes to do that sometimes. They like to not give everyone an opportunity. And if you're not looking, and if you're not, if you weren't there watching the market, then you probably missed it. But that was your sell signal. Again, this is where I shorted at. We then came down. Now we had a level of support here. It's about 394.30. is what I've noticed. And we started to flag out, and I marked that out as a bear flag. Now, I didn't put out a video pointing this out, but clearly it looked like a bear flag. And then this morning when we gapped down, we broke that bear flag, and it looks like we're just continuing to the downside. So as of right now, the target that I have on this move down is right there, 382.78. And you can get that target by kind of taking the highs of your first leg in the bear in the bear flag, and then just take it to the flag, and really where the point of the flag breaks, and you can see the projected target is right there at 382.84. And also if you roll out, and if I go to the daily chart here, you'll see that level was your former high right in here, right there. So that's our target for now. I think we're likely going to get a bounce down here. But I am also seeing some bigger things going on, so I want to point this out. I do think we're heading lower down to about this level. I think we're going to bounce. I think we'll likely bounce back up to that 394.30, and then I think we're likely going to roll over and fail at that level. Here's one thing I want to point out on the weekly chart. As I zoom in, let me clean this up here. Big, nice bearish engulfing candle right there on the weekly. See that week on the triple Qs, how we basically traded all the way up to the highs. We were pretty much all the way right there, and then ended the week at the lows, basically capturing or completely encompassing this former candle. That's a bearish engulfing. Now, what you want to look for, bearish engulfing candles are potential reversal candlesticks, and this is a weekly chart, so this could be a bigger picture trend reversal. Again, if you guys are unfamiliar with these concepts, check out my stock market technical analysis course. I go into candlestick analysis, trend line analysis, divergence analysis, risk management. It's all in the course. It's about a 4 to 5 hour training course, and I charge a $99 flat fee. So check that out. Link in the description below. So there's your bearish engulfing. Again, you want to see follow through. So next week, we'd want to look for more selling to come in, and that'd be our confirmation. I think we're going to get it. What I think we're going to get is likely going to head down to this 382.90 area, hit that, maybe bounce closing the week somewhere in here, but giving us a confirming selling week on this weekly chart, meaning that we had a bearish engulfing with confirmation. That's likely going to be a reversal, and we're probably going to see lower prices. So that's why if we get that weekly candle that confirm more selling, I think we're going to bounce maybe the following week, run up here, bounce off of this, hit that 394, and then continue to roll over and potentially roll down to the next level of support. So, and I'll have to mark some of those out. This isn't exactly it, but that's what I'm looking for on the triple Qs. SPY, let's go to see big bearish engulfing candle on the SPY as well. So you see that this week just engulfed the last 3 weeks. And really most of that selling came today on this half day. So again, they like to do that. They like to come in and smash the market in low volume, and that's basically what happened today. Now I know they're blaming it on a new variant of the virus, but in general, they picked today for a reason, and this virus didn't just become known all of a sudden. They picked today for a reason to smash it down. And I think in general, they probably caught a lot of people off guard because that sell signal came late into the close. And then on this half day, they smash it pretty good. Okay, so that's, we've got a little bit more to go down here. 454.07, I think, is the next level of support on the SPY. So look for the cues in the SPY to start to run into those near-term supports. But again, with this weekly being a bearish engulfing, there is the potential this is a reversal candle, and so you want to look for follow-through. If there's more selling next week, that's going to be your follow-through, and likely we've started a big trend reversal. If that's true, we'll watch this trend line right here on this red trend line all the way down here at about 440 or so. Now again, that trend line is your bull market trend line coming all the way back to 2009. There's your 2009, and you can see we've hit that trend line for the last decade, and it's held support. But we finally broke there in 2018. It's been resistance. Now the Fed was able to pump it back up, but we've been just grinding above that trend line. So you'll see there, every time we hit it, the buyers step in. So I don't think this time will be different. Look for the buyers to step in. What we'll really be looking for is, bigger pictures if we get another break of that trend line. Until we see that, we'll just take it day by day. IWM, all right, so false breakout. So big sideways trading range in IWM, the small caps. We broke out, but again, that breakout came with negative divergence. We had, the momentum was still trending down, and this breakout wasn't able to really pick up the momentum and run with it. So breakouts that occur with negative divergence often fail or have a higher probability, and that is what happened here. So now that we've clearly had that false breakout, and you can see it's just impulsively heading down to the bottom of the channel. So I'd look for a tag of that. We might bounce here, run up, fill the gap, and then roll, but I would look for us to head down to the bottom of this channel. It's about 209 before we, let me get rid of that. I think that's more likely before we reach new all-time highs. Okay, gold. Gold sold off a little bit. Now, I think this was a buying opportunity that we just got in gold, and I think we're likely going to start to head up. Perhaps the fear trade is going to kick in, and you're going to see people rush to safe haven plays like gold. Gold basically closed down right there at that 1790 level. You can see we're sitting at 1791, right up, pretty much right on support. If I go to the weekly chart, you can see all the way back here. This was 1790, 1788, 1790, right in there. Held resistance, and that should be the new support. We've broken above. We've chopped through it a little bit, but ultimately, we're right on that support again today. So closing the week on support, they're going to leave everyone guessing. I think we're going to rally off this level, but, we have to wait to see. Again, we've had the negative divergence. The real last negative divergence that we had was right there. I know my chart looks pretty messy because I've been pointing this stuff out, but you'll see here that basically, let me just mark it out. So this one, you'll see that basically we made a equal low right there as the former low right in here. And yet, see the momentum, it was right there. Pretty much a higher low, especially in the RSI right there, or the PPO. See how that's a higher low than the former low? That was bullish divergence. So that tells me that we're likely going to rally and continue the uptrend in gold. I don't see any real change in that. Looking at the miners, they kind of sold down today a little bit. GDX pretty much right there on support. I could be off just slightly, but it's a slight breakdown, but it's not that impulsive. And GDXJ, and then GDX, maybe this is our support level right here at about 31.36. So watch gold, watch gold bullion. That's really the tell. I mean, fundamentally, gold actually the miners should have really benefited today, because for one, the dollar sold off, pretty good sell off in the dollar, 0.8%. Oil took a really big hit, which is one of the major expenses for gold miners. So oil just became cheaper. The dollar sold off, and gold was up slightly. So fundamentally, was actually really good for miners today. But again, they're stocks. The algos take over and just sell things. which might be an opportunity. Here's oil. You know, we had a level of support right there at 75.40. That was kind of your former high. Big impulsive breakdown. Next level of support, I think, is about 66.63, and that's kind of a former high from back here. You can see that was support. So we're basically right at it. We might chop through it a little bit, but I think we're likely going to hold some support right in here and probably get a bounce off this level. So might be a buying opportunity, maybe a little bit lower. Look for bullish divergence to start to show up. We don't have it yet. You know, we've got pretty strong momentum to the downside, pretty strong price to the downside. So we'll watch that. And the financials broke down. You'll see here coming off the March 2020 lows, clean up trend line on the daily chart on XLF. We broke. They did a little fake out move. They love to do that. You know, the algos are always playing games. But today, big impulsive gap down and just selling. So that's clear sell signal right there in the financials, which sets us up for lower prices. I think we're likely going to head all the way down here to about 35, 36 would probably be a target. But clear sell signal in the XLF today. All right, guys, that's all I have. Everyone have a great weekend. I'm going to wrap up. Leave me a thumbs up on your way out. Catch you on the next one.